What up, y'all? So here's how you could have caught over 50 points trading the NASDAQ today. So let's get right into the chart. So we have the 4-hour chart of the NASDAQ pulled up here. So the first thing I want to point out on this chart is that we do have these relatively equal highs that are resting up here at 21,960, 970. So I do want to point that out as a potential draw on liquidity. So when I saw that today, I had a bullish bias going into today, primarily because of that, and also because of the fact that we had been disrespecting this 4-hour SIBI here, right? We've completely inverted it, and now we were trading back inside of it as an inversion fair value gap. So seeing that, I kind of had a bullish bias, and then we also did have this bullish 4-hour fair value gap that we were holding as well. So these two things were pretty important. We did kind of mohawk out of there as far as the close, but you know, we did close back inside, so it was reclaimed in either case. And we also did have this 4-hour BISI that was here from Sunday night as well. So we didn't quite trade into that, but we did get close to it. So if we go to the hourly time frame, you can see that going into the 10 a.m. hour, we had taken the previous day's liquidity from the Asian session lows, right? So that's always a key liquidity pool, which are our session lows, right? So you can have your New York session lows, New York session highs. You can have Asia session lows, Asia session highs, and then you can have your London lows and your London session highs. So you always want to be aware of where those session liquidity pools are resting. We had London here. I'm sorry, we had Asia here, and then we had London here. So we did take out London. Asia was a little bit lower down here, but we did take out London. And then when we took out London, we quickly ran back up about 100 points at the 9 a.m. hour when the market opened. And we had this change in state of delivery form here, right? So again, this is what I look for every single day. I like to see a sweep of liquidity and then for order flow to change from one side of the marketplace to the other. So in this case, because we swept sell side liquidity, I wanted to see us now see order flow change from bearish, right? This was all bearish order flow to bullish, right? And we also did have a lot of low resistance liquidity resting here. Right, so all this trend line, that's trend line liquidity, which is also can be considered low resistance liquidity, right? That's very, very important to note, because generally what happens is the market can take all of that liquidity at once, right? It's notorious. That's why it's called low resistance. It's notorious for being taken all at once. So if we go to our 15-minute time frame, we can see it a little better. You can see once the market did open at 9:30, we had a quick run up here to grab our highs here, right? So we took liquidity here. This was our London highs from that session. And then we also had Asia highs up here, which we didn't quite take, right? And then this was our change of state of delivery on the 15-minute, which was here, right? So now we were bullish on the 15, we were bullish now on the hourly. And so now I wanted to see some sort of structure that would validate a good entry. There was plenty of entry opportunities here, but I didn't quite want to take a trade pre-market. So you can see as well as that we did have this liquidity resting here as well. So now if we kind of fast forward this, we can kind of just see going back to the hourly, how did this market actually end up trading? You can see we come up higher. We take all this low resistance liquidity. We retest this change of state of delivery at 10 a.m. right? So if we go to our 10 a.m., we had Powell speaking today. If we look on the 15, we have Powell speaking. So I wasn't interested in taking a trade prior to 10 a.m. because Powell was speaking. Although this was an amazing entry here, retesting the hourly change of state of delivery into a 15-minute fair value gap. And then we had expansion higher through all of this low resistance liquidity. So that was an amazing entry here at 10 a.m. But again, because Powell was speaking, wasn't particularly really interested in that. So the market did end up then coming back, and we did end up trading back into this hourly change in state of delivery, as well as this hourly fair value gap here, right? This was important to note because this, again, verified that we were still in bullish order flow, right? Although we had swept all this liquidity, we still hadn't really drawn to these highs quite yet, or even these relative equal highs on the larger time frame. So, and now we're holding this this hourly fair value gap. So if we now go to the 15-minute chart, we can kind of see a model within a model. So everything I just showed here, again, we came and retested this 15-minute change in state of delivery at 12 o'clock, traded higher, had this 15-minute SIBI put in, we traded into it and traded back lower here. So now essentially what I want to see to validate a long setup is I want to see us have some sort of manipulation and changes to the delivery on the lower time frame now. So now if we go to the 1 minute, you can see here that the market did come and like I said, we traded into this hourly fair value gap here, which was this fair value gap you see here. You could take this one off just for fusion. And then we had this hourly change in state of delivery as well. So you can see we did ultimately end up coming down, and we did end up sweeping these internal liquidity lows here, right? This is internal liquidity. So like I said, I want to see a model within a model. So now I want to see that same sweep of liquidity, sell side liquidity, to justify me getting in long, right? I wanted to see this get inverted, right? This 1 minute SIBI, I'd like to see that be inverted. And then I would like to see a change in state of delivery validated with a close above this candle, right? And so you can see we end up trading into that fair value gap a little more. And ultimately, we do validate that change in state of delivery here, which we could have re-entered now coming into our 120 macro. So a lot of people are there's a lot of opinions about whether or not there is actually a macro between the 20 to 40 minute mark of each hour. Me personally, I believe there is. We know ICT says there's a macro at the end of every hour, at the last 10 minutes of each hour and the first 10 minutes of the next hour, right? And of each hour. We know there's a macro at that time. However, I've also seen price tend to spool, generate liquidity, seek liquidity between the 20 to 40 minute marks as well. So that leads me to believe there is some sort of algorithmic price delivery happening at the 20 to 40 minute mark of each hour as well. So I generally do like to consider the 20 to 40 minute mark as a macro as well. So I like to take my trades within those time frames. So you can see we do get that retest here of this down close, these two down close candles, right? That order block. So could have entered here with your stop loss below here, right? Because we had this BISI, which should have held, right? If we're truly bullish now, we should see this BISI hold, as well as this inversion fair value gap, right? And these down close candles, right? And if we want to find the midpoint, you can even find the midpoint of it just to get a better stop loss. You can see the midpoint of these down close candles, which is the mean threshold of this order block, is right here at 759, right? So a stop loss here at 758, or even a little lower if you want to be safer, should be pretty safe, right? You have 3 PD arrays. In fact, you have these down close candles here that should support price as well. So you have plenty of reasons for price to be supported above this price. So that is why you have to know what PD arrays look like in order to determine what's a valid stop loss. Targeting now, as far as a target, this internal liquidity here could be a first target or partial, or you could just move your stops to break even there. And then we did ultimately have our low-hanging fruit objective here inside of this sell side imbalance, buy side inefficiency that was resting here. So that ultimately I think is the best target, because that is the best low-hanging fruit objective outside of this internal liquidity. You did have this internal inefficiency here. So now that we can see, if we zoom back in, the market does end up trading lower into the order block and into our BISI ultimately. But, you know, we do end up now getting delivery outside of that slowly. So we'd have to be a little patient. But ultimately we do start spooling, and you can see inside of this 120, right? As soon as 120 hit, we come back into the order block, and now we begin to spool into this internal liquidity here. So at this point, this is when you can move your stop loss to break even, right? Once we take out that liquidity to cover your costs. Now it's a risk-free trade targeting this internal liquidity here. So now we should just get smooth delivery all the way into those highs. We did also have an SMT here as well that I want to point out, right? This low on the S&P 500 was not taken out, while the NASDAQ did take out this low. So that's another confirmation that made this an A+ setup, right? And again, this is a model within a model. I showed you the larger time frame model. It was that same sweep of liquidity, change in state of delivery, retracement back into that order block, right? And then we ultimately can enter there and hold now to target. This was the same exact model, right? And that's the best trades. The best trades you'll find is when you can align the models, right? You can find a model within a model. This same model you should be able to find on any time frame, and drop time frames until you can find the most precise entry for that model, which in this case today would have been here. So that was, I think, the best trade of today. There was a couple other opportunities, but I think this was the highest A+ setup from today. So that's all I got for y'all in this one. I will see y'all in the next one.